Today is the first of a series of webinars that we're hosting to help you navigate managing your business, employees, gaining access to capital, and building your business during this really difficult time. Be sure to register for these other webinars on the GAF training page. I am super excited to introduce to you today Jean Marks. Jean Marks is a CPA and a noted contributor to MSNBC, Fox Business News. He's also a contributor to the Philadelphia Inquirer, the Washington Post, Forbes magazine, and a speaker, and has spoken at the National Roofing Association, Furniture Associations, and a variety of other association conversations. Today, we are recording this call so that you can come back to it later if you need. So happy for you to use this on an ongoing basis. There are three key questions that we wanted Jean to cover today. The first two are, how does the CARES Act operate in terms of helping you preserve jobs and preserve incomes? The intent of the act is to allow you to keep employees through this business possible slowdown and provide you access to cash, and in some cases, loan relief. And lastly, as a CPA, I want to make sure that Jean provides you some updates in terms of tax filings that are important to know in this time. So now I'm going to hand it over to Jean. He's going to have the floor for the conversation. We'll open it up for questions later into the call. Thanks a lot.
Jeannie, thank you very much. Hey guys, I'm glad to be here, and I'm glad that you're here as well. I know we're all going through some tough and challenging times running our businesses. And Jeannie is right, I do write for a lot of different places, but I run my own business as well. I have a 10-person company. I've been applying for some of the stuff that you guys are applying for as well. I work with a lot of independent contractors, a lot of solo sales reps. I work with a lot of small businesses, and I become somewhat expert at navigating our way through all the different options there are to get funding. And that's what I'm going to cover today. Okay, so in the next 40 minutes or so, I'm going to leave open for some questions. If I don't get to all the answers by the time we finish, I'm going to give you my email address, and you're going to email me directly with any specific questions about your business. But what we're going to cover today are really three big things, three big ways that you're going to be, that you have available to get money for your business. The first is economic injury disaster loans, and what they're all about. The second is the Paycheck Protection Program under the CARES Act that I'm sure most of you guys have heard of. And finally, I just want to make you aware of some tax credits that are available that, if you don't take advantage of some of these things, you can still get a lot of money back from the government. So if you're ready to start, I'm gonna give you a bunch of information for you to follow. I will try to keep it succinct and keep it as slow, but feel free to ask questions in the chat window, and Jeannie will be accumulating them. So here we go. The first of the three areas that you want to consider for financing for your business are the economic injury disaster loans. You get these loans directly from the Small Business Administration. You go to sba.gov and you look, you'll see right on the homepage, you will be directed to go to where there are economic injury disaster loans. This is a program that has been around for actually a number of years. It's set up by the SBA so that they can help small businesses with less than 500 employees, and that includes independents, independent contractors, sole proprietors as well, helps them in disaster areas. So in the past, it's always been people that were affected by hurricanes or floods or things like that. Now, because of the pandemic, every state has declared themselves a disaster area. So the SBA is now making this program available. So the good news is that you can apply directly to the SBA. There's no intermediary. And because the system is set up to take these loans, they've done this before, they've been through this dance already. The turnaround time, the infrastructure, the loan application is quite simple to do. And the turnaround time, I'm told, is days, not weeks. And we'll talk about when you're going to see your money on some of the other stuff soon. Okay, so this is a loan program. It's an economic injury disaster loan. When you fill out the application, you're going to be putting in some financial data about your company. You will not be asked to submit any documents, just represent certain financial data, and wait for the SBA to get back to you. You can apply if you have less than 500 employees. And here's the details of the loan. You can borrow up to $2 million for your company. The interest rate, if you are a profit company, is 3.75% annually. If you're a nonprofit, it's 2.75%. And here's the thing, it's a fixed rate that you pay back over 30 years. Now, some people have asked me like, hey, would it make sense to maybe, just get a loan from my bank, or I have an existing line of credit that might have a smaller, or a lower interest rate? But my advice to you is to, think about that. Lines of credit that you might have with your bank might be a slightly lower interest rate if it is, but it's variable, which means you can change. And I don't want to get political here, but all the money that's being spent on these stimulus programs, it's going to have to come from somewhere. My concern is in 2021, 2022, it's going to impact inflation and interest rates. And locking in on a 30-year fixed rate of 3.75% now, if you can get it, might look like pretty genius in a couple of years if interest rates really do go higher, which I think they may very well. So bear in mind that it's a good loan that's available to you. If the circumstances are right for it, it should be something that you strongly consider. There are two other parts of the loan that you should know about. The first is about the advance. When you apply for the loan, you are available to get up to a $10,000 advance. That's just money that is promised within 48 hours. The reality is I haven't met anybody yet who's getting it in 48 hours because the SBA has been inundated. But it's the money that should come first, and hopefully would come soon, within a couple days after applying for the loan. If you get the loan, the amount of that advance is added to the principal balance of the loan. If you don't get the loan, you keep the money and you don't have to pay it back. So it's an advance on the funds that you need. The second thing to know about economic injury disaster loans is that there's something called SBA Express loans as well. It's under the same program. If you have ever borrowed with the SBA before, if you've ever used any of their existing loans in the past, so you're in their system already and they don't have to go through the process of setting you up in the system, you can immediately get a $25,000 advance on your economic injury disaster loan. Same terms, but it's a very, very quick turnaround if you already have a relationship already. So in summary, economic injury disaster loans, they are just loans. They are directly from the SBA. You go to sba.gov, $2 million, 30 years, 3.75%. There is a $10,000 advance up to that you can apply for. And if you've ever had any dealings with the SBA before, you can get a $25,000 advance loan as well, as long as you're in the system. That's what you need to know about economic injury disaster loans. That's first topic. Second topic has to do with the Paycheck Protection Program. We've heard about it in the news. We've heard that there's a lot of troubles getting the money out and infrastructure issues and some of the banks and what. I'll talk about that in a minute. But let me explain to you what the Paycheck Protection Program is so that you just got a handle on it. First of all, it's under the CARES Act, that big $2.2 billion stimulus, $1 trillion stimulus plan that you heard about that passed a few weeks ago. $350 billion was set aside for this program. As I speak today, they're already considering, the Senate is considering adding even more funds to this specific program as well to help small businesses. You can apply for the Paycheck Protection Program if you have less than 500 employees in your business, if you're an independent contractor, if you're a sole proprietor. The difference between this program and those economic injury disaster loans that I just spoke about is that this program not only loans you money, but it forgives you money. I'll talk about that in a minute. And number two is you don't get this from the SBA. Don't go to the SBA if you want to go for the Paycheck Protection Program loans. You need to go to a bank. The Treasury Department has said that any FDIC insured institution can handle these loans. I have been recommending to my clients to go to SBA member banks who have experience working already with the SBA. Some of the member banks might be even larger. And if you do go to them, you want to ask for the banking group, the loan officers that deal with the SBA. You don't want to deal with somebody or work with someone who has no experience with these loans. There have been some banks, some large banks that are restricting the loans to existing customers and things like this. So I realize that's an issue. So if you want to find a bank, I have 3 options for you. Number 1 is go to the SBA site and there is a lender match that you can search for, where you can search for a bank in your area. That's 1. Number 2, go to Google. Google SBA bank near me or SBA lender near me, and you will find listings and availability of banks and other financial institutions that are near you. And number 3 is, I think that the more you lean towards smaller community banks and other lenders, the more easier the process will be for you. Community banks have been great. Credit unions can offer this as well, and many have been stepping up to the plate. And there are some online lenders that are offering this as well. Kabbage is one of them, K-A-B-B-A-G-E. Lendio is another one, L-E-N-D-I-O. And I understand as I'm talking now, PayPal and On Deck are coming with their own programs to do this. I like those online lenders because they have the infrastructure already built. It's kind of what they already do. So they're able to handle and process a lot more, applicants than maybe a bank or even a community bank that might not be up to that kind of speed technology-wise. So there are options for you to get your loan. Now, what about the loan itself, the Paycheck Protection Loan? You can borrow up to $10 million under this loan. When you borrow the money, you have 2 years to pay it back. The interest rate is 1%, and you don't have to start paying it back for the first 6 months. So you won't owe anything for 6 months, 1% annual interest rate, and you have up to 2 years to pay this loan back. You're not going to get $10 million. Right? I mean, a lot of people may, but most of my clients, particularly if you're a smaller company, you're probably not going to get $10 million. How much is available to you? You calculate your loan availability. Your loan availability is basically your payroll of your company. And when I mean payroll, I mean cash compensation, tips, other compensation. If this is just you running the company, if you're an independent contractor or a salesperson, or if it's just a small business and maybe you're not taking a paycheck, but you're taking distributions, it's any of your compensation subject to self-employment tax on your tax return. So talk to your accountant if you're not sure of that, but your wages will be included even if you are a business owner. You take your wages, your employees' wages, you can add on to it health insurance, retirement benefits, state and local taxes, but not federal, the employer's portion of federal. You're going to come up with your total payroll over the past 12 months. You are going to figure out an average monthly payroll, and you're going to multiply it times 2.5. That tells you how much of a loan you're able to get. So say you figure out your average monthly payroll over the past 12 months was $100,000 a month. You can borrow $250,000 through an SBA member bank. That's the calculation you need to go through. Here's the best thing about the Paycheck Protection Program. It's going to forgive you a lot of those amounts. The program itself, once you get the loan, the clock will start ticking. When I mean ticking, you will have 8 weeks to spend that money, and you're going to be spending it on payroll, and other operating expenses. 8 weeks is the period. After those 8 weeks are over and after June 30th goes away, you're going to go back to your banker. You are going to submit the documentation that you have for your payroll expenses that I just mentioned, plus utilities, plus your rent, or even your mortgage interest. And the amounts paid for that will be forgiven on your loan. Now, the mortgage interest and utilities, the non-payroll, is subject. It can only be 25% of the forgiveness, but the rest of it will be forgiven. So say during that 8-week period, you had $100,000 worth of payroll and rent and utilities, and your loan was for $125,000. $100,000 of that $125,000 will be forgiven. and you'll be left with a $25,000 balance that you pay off in 2 years at a 1% interest rate. The compensation that you include in all this, by the way, it's limited to $100,000 annually per employee, which means that if you have any employees just making salary more than $100,000, you can include them, that number, in the calculation for how much loan is available to you, how much forgiveness is available to you, but only the first $100,000. So if they're making $120,000 a year, you can only include the first $100,000 in those calculations. So all that forgiveness is done for you. There's another restriction, your head count. So the government wants you to keep people employed during this period. It is giving you a date range. The date range that I have is between February 15th and April 26th. If you let any people go during that period of time, the government is telling you that you need to restore your payroll to those levels by June 30th. If you don't restore your payroll, your head count, to those levels by June 30th, you'll still get forgiveness, but you're just not going to get all the forgiveness that you could potentially get. Some other things about the payroll protection program that you should know. If you're an independent contractor or an independent sales rep, you absolutely are eligible for this program. In fact, you could start filing with a bank on April 10th for your benefits. You might say, hey, I have no payroll. I don't have any employees. Well, you have yourself. So you've got your self-employment income. That's your payroll. And okay, maybe you don't have an office, but if you're taking a deduction for a home office on your tax return and you've got a portion of your mortgage or rent in your apartment that you're paying for that, that would also be eligible. So independent contractors, sole salespeople, sole proprietors that are in business for themselves, you absolutely can apply for this program as well. Some people say to me, hey, I've got multiple businesses. Can I apply for multiple loans? Well, it's a little trickier, but just be aware, there's only one loan for tax ID. So if you've got 3 businesses with 3 payrolls, with 3 tax IDs, you can potentially get 3 loans. However, if you exert overall control over those 3 businesses, you may be asked by your banker to consolidate all the loans together. So just be aware, but you can get them for different businesses depending on what your situation is. And also, with the Paycheck Protection Program, you may ask me, hey, Gene, I'm getting the economic injury loan. Can I also get the Paycheck Protection Program loan? And the answer is yes, you can. It's just no double dipping is allowed. If you do get money under the economic injury loan, you've got to use it for stuff other than the stuff you're asking for forgiveness for under the Paycheck Protection Program. So you really want to keep those things apart. My final advice to you when it comes to the Paycheck Protection Program is this. You are getting your loan with a bank, not the SBA. The bank is guaranteed by the SBA. The bank is receiving guidelines from the SBA. So that's all fine. But in the end, you're going to sign an agreement between you and your bank. And when you sign that agreement between you and your bank, it's going to be just the 2 of you guys. They're going to have to pound out the details. So my recommendation is read that agreement carefully before you sign it. Make sure the terms of forgiveness are consistent with what you thought that they are, consistent with what I'm telling you that they are, because in the end, you don't want to be in August having a shouting match with your banker over what qualifies for forgiveness or not. So just make sure that you iron all that stuff out in advance, because you're going to be revisiting this during the summer when it's going to be time to ask for money back on that loan. And you want to make sure that you've handled all those issues up front. So the Paycheck Protection Program, it's a big deal. Now, the final thing I'll say to this, people ask me, when am I going to get my money? I'm reading in the news, some banks aren't lending money. There's technical problems. The SBA system collapsed just the other day. I mean, there's all that is going on. You know, it's just, so what I'm telling my clients, you're really going to have to sit on your thumbs after you apply for about 1 to 2 weeks. That's what I think it's going to take. I hope I'm wrong. I hope, you know, the bankers step up their act and get the approvals done quicker and the processing done quicker. But just realistically, there's just tens and tens of thousands of applications that are being processed right now, even more than that probably. The bankers are trying to catch up. The systems are older. give yourself 1 to 2 weeks. So recapping so far, you've got the economic injury disaster loans, straight loans from the SBA, $2 million, 3.75% interest, 30-year fixed rate, right? The second option that you have is you've got the Paycheck Protection Program, not through the SBA, through an SBA banker. Up to $10 million you can get, but it's based on that formula of your salary, your pay. And then you can ask for forgiveness. So basically, it's kind of free money from the government. Whatever's left over, 1% interest rate, you got to pay that back over 2 years, but the first 6 months, you don't have to pay anything at all. So those are the top 2 things. I have one final thing to discuss just for a few minutes, and then Jeannie, we can open it up to questions as well. And that has to do with tax credits. Now, if for some reason, whatever it is, you don't take advantage of the Paycheck Protection Program, there are still some big tax credits that you need to make sure that you're going to be getting this year for the pandemic related stuff. And the tax credit is this: if your business has had to partially or suspend your operations, or if you've seen a revenue loss of more than 50% this year, you will be eligible for a pretty giant tax credit. It's 50% of the first $10,000 for each employee, which basically means it's like $5,000 an employee, a credit that you get against their payroll taxes. So on a future payroll tax return, when you're going to have to pay in your employer's share of payroll taxes as part of the quarterly payroll tax returns, you're going to have a credit that goes against that, so you don't have to pay in anything. It's part of a big tax credit program, and it's something that you want to consider and talk to your accountant about. You are not eligible for this tax credit if you're participating in the Paycheck Protection Program. Some people have asked me, they've got employees that are taking advantage of the Emergency Family Medical Leave Act because they might themselves, you have a family member that's been affected by COVID-19. You get a tax credit for those employees as well, because you have to continue to pay them. That's even separate than the tax credit that I just mentioned, the employer tax credit for what's going on. So there's these tax credits that are available that you need to talk to your accountant about if you're not participating in the Paycheck Protection Program. So big summary: economic injury disaster loans, Paycheck Protection Program, loans, forgiveness, and some tax credits that you should be aware of that are out there as well. So I think I've given the information that I wanted to give. I probably have not thought of it all. So Jeannie, let me turn it back to you. Let's see if we've got some questions coming in or some questions of your own, and happy to field anything.
Great, and we've just got some terrific questions coming in. So you've covered a few of them up front.
I can do it again. By the way, no problem repeating some stuff, because I need to hear things 10 times before it sinks in.
Absolutely. So I appreciated up front that you covered the fact that if you're the business owner in an S Corp who's on the payroll, that can count in the payroll. I'm glad you covered that. Appreciated that you covered that some of the larger banks have not been as facile, and you give people alternative banking relationships in terms of where to go get loans.
So let me interrupt you if you don't mind. Back to the S Corp issue, just as a reminder, if you are an owner of an S Corp or a partnership and you're not taking a salary, you're just taking distributions, which a lot of us do, right? Remember, it's the income that's subject to self-employment tax that can be figured in your payroll calculation for your loan and your forgiveness. So that's the income that you have. That's number one. And then you're right about the alternative lenders. Cabbage with a K is excellent. Lendio, and keep an eye out for PayPal and On Deck. I like all those options because they're set up to handle these loans pretty well.
Also, along the lines of how to calculate what's the payroll, I just want to do a double check. Would you include sales staff commission 1090?
You do. So you are not 1099s. So if there's no 1099 income is included in the payroll calculation. And let me again repeat, just because I need to hear things 10 times, Jeannie, right? But remember, you're going to have a calculation to determine how much loan is available for you, right? You can get up to 10 million, but it's really 2.5 times your payroll expense, okay? Your payroll expense is all compensation including commissions that are paid to your salespeople as long as they're employees. It does not include 1099 payments. So if you've got anybody that's getting 1099, that does not figure into your payroll expense. If that, hopefully that helps.
Great, thank you. There are several questions about forgiveness. What is forgiveness? What happens after 2 years if you don't pay it back?
Right.
There's
So
a person pay limit for forgivable amount.
So let's walk through that just to make sure. So you're going to take your loan from the bank. So say you do the calculation, and again, there's a loan calculator that if you want to email me, I'll give you my email address. I can share with you a good loan calculator. But let's say you figure out, and the bank agrees that it can loan you $100,000 for argument's sake. Okay. So then the clock starts ticking once you sign off on that loan agreement, and 8 weeks goes by, and you're keeping good track of all of your expenses over those 8 weeks. After June 30th, you go back to your bank and you say, hey, you know that $100,000 loan that you gave me? Well, I incurred $80,000 in payroll and rent and utilities during that period of time. And you send that documentation into the bank, and the bank reviews it and agrees that it was your payroll, your rent, and utilities. The bank will come back to you at that point and say, we get it. Your loan balance is now $20,000. So it just reduced it right away. And that'll happen this summer, particularly if you remember, you've got to be proactive and do that. It's not like your banker's going to try and track you down to reduce that loan. You've got to do that. So then you've got $20,000 left over. You have 6 months until you have to pay it, 6 months from the time you got the loan. And then you owe that loan. It's a 2-year term at 1% interest. So you're going to owe the money, whatever's left over, but obviously at very, very low interest rates for a 2-year period of time.
Great. So now there's also a bunch of questions about preparing for the loan application.
Right.
The questions are, what happens if I currently have bad credit? Is there a credit requirement? Do I need to be a citizen to apply? What kind of advice do you have when people are thinking about their credit?
Okay, so the first bit of advice that I have for you when you're preparing for the loan application is to pour yourself a big shot of Jack Daniels, because you're going to need it. After that, and you have consumed it, and you're a little bit more relaxed, you want to go through, first of all, a sample loan application. Now, the Treasury Department has given all the banks a sample loan application to use, the information that they should be asking and getting. It's available if you Google it, or again, if you want to email me, I'm more than happy to send you the sample loan application for the Paycheck Protection Loan. But if you Google it, you'll be able to find it. That's your document to make sure that you're completely ready with all the documentation that's going to be asked for, okay? Number two, if you are working with a good bank, they have an online application process. Some people have told me that if they were working on it, they weren't able to save it. So if they didn't know the answer and then they had to go and look for it, and they come back 15 minutes later, they've been timed out and they had to start all over again. So that's a problem. So again, you want to be prepared to do this in advance with the sample loan application, so you know all the answers before you actually start the online process. Now, as for who can apply, if you are, you don't have to be a U.S. citizen. You can be a U.S. citizen or a green card holder to apply for the loan. Those are the two requirements. So it's not just U.S. citizens only. And what else, Jeannie? I thought this was some other.
Do you need to have good credit?
Oh, great question. So that depends, okay? I mean, in the end, the SBA is leaving the final decision up to the bank, but remember, the SBA is guaranteeing the loan, and the SBA has told the bank that it is significantly relaxing its credit requirements. So if you don't have a great credit history, if you've defaulted on a loan in the past, even if you have another loan outstanding with the SBA, my clients and the people I know in the banking industry I know have told me that it is a much more lenient process than it would be in any other time. The government's objective is to try and get the money out there to as many people as possible so they can see this thing through.
Okay, great. There are some other questions, and for folks on the call, we are recording this. We're also reviewing all of the chats. We're going to share them with Jean if we don't get to them, but right now we're getting through a good portion of them. So Jean, I think during the conversation you talked about, wow, I want to apply for both the economic disaster loan as well as payroll protection.
Right.
Can I use the economic loan to cover payroll? How do those two work in conjunction? Can you remind the folks?
I can. So first of all, you can absolutely apply for both. You can, if you want to move the economic injury disaster loan over to your paycheck protection loan, you could do that as well, combine them both. You can have them as separate. If you do keep them as separate, the government wants you to not double dip. In other words, they don't want you to use funds designated for one loan for the purposes of the other loan. So whatever funds that you get for the economic injury disaster loan, for example, shouldn't be used for payroll if you're using the funds from the Paycheck Protection Program loan for payroll and then asking for forgiveness. Now that's what they're asking for. I just want to be clear, and Jeannie, I mean, this is because, you know, I'm an accountant here. Kind of tough to track that. I don't know how the government even audits that or how they can even prove that what funds was used for another, particularly if they're going into the same account. But that's what they're telling people to do, is to don't commingle them, to keep them separate expenses. And that's, you know, that's the guidelines that we're following.
So then you talked about tax credits. How does the tax credits work if you don't get the loans?
Right. Well, the tax credits really are designed for people that don't get the loans, particularly the people that don't get the Paycheck Protection Program. So the big tax credit is on payroll. So any employee that you're paying this year through the end of this year, 12/31/20, in excess of $10,000, you get a 50% tax credit up to $10,000 of compensation. So $5,000 per employee. So say you've got 10 employees in your company, say they're all making more than $10,000 a year between, beginning of March and December 31st, you're going to have a tax credit of 10 employees times 5, or $50,000. You take that tax credit against future 941 quarterly payroll tax returns. So when you're filing your payroll tax returns and you're paying in your taxes to the government, you won't have to pay it all in, because you can take a credit against them, and that will save you some funds in the future. Again, only applicable to people that do not have the Paycheck Protection Program.
Okay, so I'm going to ask this question, and I'm not a CPA. So again, this might sound like another flavor on the tax credit question.
It's okay.
So regarding the payroll protection program, regarding the tax credit portion, do you qualify for the tax credit if your sales total ends up being the same as 2019 at the end of 2020, but you needed extra employees to get to the sales total?
Oh, that's a really great question. So you would not. And let me explain to you why. The tax credit is only eligible to companies that suffered significant losses. They were forced to shut down or have partial operations because of COVID-19. These are companies that are not considered to be essential businesses, or that the government shut them down. Or if your company experienced a significant revenue decline from the same period last year, that term of significant is defined as a 50% revenue decline. So if you had the same amount of revenues this year, even if you had more employees to produce it, the tax credit, you would not be eligible to take that tax credit. If you already had the Paycheck Protection Program, though, that's where you want to get your money and get your forgiveness for that. You wouldn't be eligible for the tax credit anyway if you're asking for forgiveness under the Paycheck Protection Program.
So I think this is a similar question, but I think these are all why you're a CPA. For the Paycheck Protection Program, does the pay for each employee need to be the same as it was before the pandemic? Right now, during the pandemic, a variety of companies are giving bonuses and incentives to keep folks working during this time. To know if that incremental payroll would be included in the payroll forgiveness of up to $100,000.
The answer is yes. So first of all, when it comes to pay and maintaining payroll, because people ask me, what if I'm paying people less? The requirement is that you keep the same head count by June 30th. But I don't think this is this question. This question is saying like, hey, during this period, we're paying our people more because we want to help them out. We want to keep them employed. We want to whatever. So does that count? And the answer is it absolutely does. So remember, you're going to come up with what the loan availability is, how much you're due under this. And again, say it's $100,000. Whatever your payroll expense was, during that 8-week period, even if you're paying your people more, giving them bonuses, that would all qualify as long as the loan's been approved or the amount's been approved. Those that come under payroll expenses would also be eligible for forgiveness.
So Jean, I just want to give you kind of an 8 minutes heads up. I know you've got a hard stop at 12:45 Eastern, so I really appreciate your time. These are phenomenal answers. I want to make sure we get the thank you in, given your hard stop. I get a ton of activity in the chat box. So do you want to share your company's email address before I go back to the questions?
Yeah, you just beat me to it. I was just going to take you there. So guys, if you have specific questions about your business, email me directly and I'll be happy to answer them. It's no charge or anything. It's just Gene, Gene, at marksgroup.net, marksgroup.net. And also, like Jeannie said, when you're putting in your questions on the chat, Jeannie's going to kind of put them all together and send me it in a document. And then, the next day or two, I'll go through them and I'll respond to your questions, send it back to Jeannie. And then, I guess, Jeannie, you can distribute it to everybody.
Yes.
Great.
So I think you touched on it. There is a phenomenal amount of activity right now.
Yes.
Wells Fargo, B of A, these new lenders that are, and the community-based lenders. How long do you think it's going to take for folks to process the application? Everybody is anxious right now. Do you think 24 hours, 30 days, 45 days? What do you think, whether it's a large or small?
Right. It's not what I think, but it's what I'm hearing and what I'm seeing right now. So, I mean, we have, I've been speaking to hundreds of business owners. To process the application, that processing goes through fairly quickly to be accepted by the system, somewhere within 24 hours. So when I talk to a lot of business owners, they go up to, whether they're putting in through their bank's site, or the financial, like a Cabbage or whatever, they put it in and it gets processed. That means they received your information. So then you're all done. You're sitting there and you're waiting to hear. Okay. So, and Jeannie, just to give you an example, I don't know how date sensitive this will be. If you're watching this a couple weeks later, maybe you'll be chuckling at it. But I know people today is a Wednesday and people have submitted their applications back on Friday. It's been accepted, but they still haven't seen any money yet. Okay. So again, my expectation is once you submit that application, you have to expect that you are not going to be seeing money into your account for 1 to 2 weeks. That's what I'm expecting. I hope I'm wrong on that. I hope it's quicker than that. And I do feel that it will get quicker eventually. But initially, in the period that we're in right now, I think you have to expect 1 to 2 weeks and you have to be prepare yourself for that before you actually see those funds.
So just because I submitted the application, most of these banks, if I submit online, they'll at least send me a confirmation saying, we received your application.
They should. But
if you don't get that application, should I reapply?
No, you should contact your bank by phone or email and ask for confirmation that way. There's no reason to waste time reapplying or to get the system. And remember, I'm hearing reports, some people, they put in the application and some people have gotten rejected. And that always amazes me when that happens. And I bet you I'm going to be hearing more and more stories of that happening. And I can't put my finger on why, because I know the government is trying to accept as many applications as possible. It's certainly not good politics to see that happening. So my bet is that there are some banks out there that are putting on different rules. There were some banks that were saying, we need 2 years of financial information, even though the rule says 1 year. I have some banks say, no, you have to submit only information certified by a CPA, and that's not true either. So some banks are coming up with sort of different rules on their own. My advice to you, if you get rejected, immediately go and reapply somewhere else. Go to one of the online lenders and just reapply somewhere else, because my sense is that there's different of the lenders are using different interpretations of the guidelines for it. So don't give up, is what I'm saying.
Okay, so once I submit my application and I come up with a loan amount, if I need more, or if I incorrectly counted the number of subcontractors that I had, can I amend my application that's already in the process? Do I go to a new bank, initiate a new loan? What do you recommend?
So first of all, you did mention subcontractors, and I just want to be clear that the subcontractors, independent contractors are not part of this calculation. So they're like just a separate cost. They're, they have to be employees of yours. But secondly, if you made a mistake in the calculation, you wouldn't reapply again. You got to go back to your financial institution and fix it, and maybe ask for more and see what they say. You can only get one loan per business per tax ID. So if you get a loan for $100,000 and you accept the loan and you sign off on the loan, that's it. That's just that is the way it is. Just be aware, if you're doing that under Paycheck Protection and it didn't work out under Paycheck Protection or you didn't get enough, that's what the economic injury disaster loans are for, because then you can turn to those and apply for any additional funds that you need to see you through.
So being that GAF is in the construction business, most of our customers here are in many states are actually considered essential.
Yes.
See, maybe they've got a slight slowdown now or a slowdown coming. Do you advise they look at the payroll protection? Because if they're still working, they're not really in the economic disaster. What's your recommendation?
Great question. So I advise that you look at them both. You have to look ahead as to what you think your business is going to be over the next few months. And which this has to do with it. Some people, they don't need the money right now, but they're like, I think I might need it in June, you know what I mean? Or May, or, it's a different, so you can start, if you talk to your banker, it doesn't start until you receive the funds. And I have reports that some bankers are flexible with when they actually turn the green light on for the loan. And when you actually I have a client who, it's a seasonal business, and he's also a roofer, but he really, right now, he's been doing snow plowing and other stuff, but then he's really not starting up to like the middle of May. So he's applying and he's worked with his banker to start the loan in the middle of May when he actually needs it. And then he'll have it for May and, in June. So that's something that you want to talk about with your banker.
Great. I think the last question, because I know you have stopped, is when the loan is forgiven, how do we think about that when we're doing income taxes next year?
Not taxable. That's a simple answer to that. So it's, when it's forgiven, when you get your loans in, it's a liability at first. So that's how you have to record it. And then once you get forgiveness, you move that down to your income statement as other income. So it doesn't mess around with any operational information. But it's a non-taxable forgiveness.
Great. I know there are a ton of chat questions that we get to. So I want to remind everybody that in the follow-up, we'll share, tell me your email address again.
Sure. It's Gene, Gene, at marksgroup.net, marksgroup.net. So you can email me directly.
Thank you for your time.
Thank you.
Invited you incredibly late last week, so thanks for squeezing us into your busy schedule.
Sure.
Phenomenal.
Good luck, everybody, and we will get through this. So chin up and look forward. So I think this cash help will be a big part of helping us get through this.
Thank you so much.
Thanks, Jeannie.